Hey, what's up, guys? Hope you guys are having a great day today, and welcome back for another episode of the Weekly Market Analysis. What we're doing today is we actually have quite a bit of stuff to cover. So far, with regard to our TradingView Trade Analysis Journal, we're not really performing very well, as you can see, being at 2367. Not performing well at all. It's an issue here of the fact that, again, I've said this a ton of times. I'm going to continue to say none of this is back tested. So while it is based off of an actual trading strategy, the back testing has not been done. And there is a possibility that we're over trading. We're taking too many trades, and that could definitely be something that's causing us to lose more money. It could also just be a losing season as well. There were times where we were at $3,800. We were $800 up. And then we just lost it all. So I think there are definitely currency pairs in here where we're also taking risks that are way too high. If you look at a lot of the yen pairs, generally speaking, are almost always taking really, really, really high risks. But it's not always yen pairs. Sometimes it's other pairs as well. It's not just the yen pair, but the yen pairs do tend to carry a lot more volatility with the trades that you take on them. That being said, though, I want to draw attention to New Zealand dollar here, which is we gotta find it real quick. So New Zealand dollar, this is a trade where I thought for sure we were going to get stopped out here, and this trade hasn't come to fruition yet. But if you look now, we rallied, and we rallied heavily. So we might actually end up getting all the way up here, and we might actually end up hitting the target, which is really, really strange considering the fact that we trended all the way down here, and it was definitely a complex pullback. If this goes higher, is a great example of what a complex pullback actually looks like. And that is, I hate complex pullbacks. They're very difficult to operate off of. You never know whether the trend is actually reversing or not. You just don't really know up until it already happens. Like right here, we've been trending higher, and then we kind of did this, giving the illusion that we were going to go ahead and we were going to start trending lower again. But then now we have this big rally out of this pair, and it's looking like we might end up making money on it after all. So, I'll keep you guys updated on that one, and hopefully it will continue to work out fairly well. But just have to kind of cross our fingers on it. I know I say that a lot, but that's the truth. You could do all the necessary work in the world. You're never going to be right 100% of the time. Now, granted, hopefully you'll be right a lot more often than I am at this point. But the idea here is just that you want to try to be right more than you're wrong, or at least if you are right less than you're wrong, you want to at least win so much when you're right. And you want to lose very little when you're wrong, right? You can absolutely make money on a strategy that is less than 50% accurate. You just need to win a lot more than you lose in terms of the actual quantity, in terms of size. And I'm not trying to say you need to win more trades than you lose, because if you're winning 40% of the time, 45% of the time, clearly that's not the case. What I mean is your trades need to be larger than your losses on a consistent basis. Like, you need to be able to lose like 5 trades in a row and still be making money if you at least won one trade. But there's still a certain level of consistency that is required for a strategy even like that to be profitable. And if you noticed with our trading strategy here, we went through one time and we had about 9 different currency pairs. 9 different trades that didn't perform well and ended up losing us money. And that was actually, we were at $3,400 in our hypothetical trading journal, and then we got brought down to $2,500. So, almost $1,000 of loss. And so far, at this current time, we have definitely lost about $1,000. So, since $3,400, it's been over $1,000 at this point. We're sitting at $2,367 like I just showed you. So it's not really performing that well. But again, this is just showing you the concepts. This is just showing you the ideas, you know, and this is just to show you, give you an idea of what you need to do. Okay, let's go ahead and hop into the dollar yen. All right, let's see here. Dollar yen, if we go ahead and hit the play button here, we are currently trending higher. We broke above, closed above. So this indicates to me that we're going to go ahead and we're going to find support here and we're going to rally, and I'm getting stopped out. I really hope that's not the case because dollar yen is set to make me $127, but and I don't really want to lose the $90 that I will lose if I go ahead and take this trade, or if this was if I get stopped out. But you know, hey, if it happens, it happens. You never know; it could come all the way up here and basically fall through the floor. So you know, you never really know. Best thing to do is just to kind of wait and see. All right, let's find euro yen. Euro yen actually did come to fruition. Unfortunately, we did get stopped out. You know, it's just one of those things where, you know, on the surface, it appeared as though we were going to go ahead and continue this trend, right? I mean, we're just trending down, trending down, trending down. We had a complex pullback here. Retracement, extension, retracement, extension, and then retracement. Another, and then just more consolidation, and then we ended up rallying higher. So definitely a complex. This is either a reversal or a complex pullback. We broke above this support level, this resistance, and this resistance level. So the real question is where are we going to go from here? Are we going to go ahead and retest this and then fall over? That happens a lot. Where just like here, as you can see, you know, if we were just to base it off of this would have been the initial area. If you were going to draw a fib retracement tool from two different locations, this would have been the first location, this would have been the second location. Because right from here, you would have drawn from here, and you would have, actually, you probably would have made money if you had drawn it from there. Let me see. I probably ended up missing this, which is why I didn't get involved. Let's see here. Okay, so yeah, if you drew your fib retracement tool from this swing high to this swing low, and you had your target up here at the lowest close of the candlesticks, you probably would actually have gotten a 618 retracement from right here to right here. I can't really draw it in because I'm not actually looking directly at this chart, but you probably would have gotten a 618 retracement, and if you did, then you definitely would have made money. Second of all, it came up here, didn't come down enough, and then we probably would have gotten stopped out from here. Let's say 10 pips above the high, so 121.15. Yeah, actually, I think it just barely touched it, but yeah, I think we absolutely did end up getting stopped out for this one. But if you had overall drawn your fib retracement tool from here, from this swing high to this swing low, then, or I'm sorry, from this swing high to this swing low, you would have actually had gotten filled and you would have made money. Here's the problem: that trade would have been astronomically huge, would have been a lot of risk. But so anyways, that being said, I think this could be a complex pullback or a reversal, and there's two ways in which we can handle this. We can either go ahead and take this trade, draw a fib retracement tool from here, from this swing high to this swing low, wait for it to come back into a 618 retracement. It may not, it may continue to rally, giving us our answer as to whether this is a, you know, complex pullback or not. Or we could say, hey, because we broke this structure level and this structure level, I'm going to go ahead and draw my fib retracement tool from this swing low to this swing high. I'm going to go long. Either way, it is appropriate. You could do either one. There's really no right or wrong answer here, aside from the fact that you just need to back test the strategy, and when you back test it, you know, go ahead and just try it out. You know, try out different strategies and back test it and see what happens. You could trade complex pullbacks just like this, and you could say, okay, after the complex pullback, I'm going to guess that we're going to continue to fall. So I'm looking for a 618 retracement, not on this one, but after I see it happen, I'm going to trade it on this one and then kind of go from there. Or you can ask yourself, is this a 2 drives complex pullback, or is it a 3 drives complex pullback? And then maybe you can predict the third drive. So that would be, if you go long, you would predict a third drive. You're essentially saying, I think it's going to be a 3 drives complex pullback, stuff of that nature. All right, next one. Let's see. That was that was euro yen. Now we get to do the dollar yen. Dollar yen still has not come to fruition, but so far. Oh, actually, we already talked about dollar yen. I'm sorry about that. Let's see. All right, which one were you on? We already did. Oh, pound Swiss. Aha! Now this is the one I literally just took today. I took 3 trades today. All right, pound Swiss. This looks like a pretty clear-cut, complex pool. Not complex pool, but just a trend continuation strategy. You know, we were kind of consolidating sideways up here at the top. We've been bearish for a while now. And then we had a short run of a bullish trend. Now I'm taking the bet that because it broke structure here, that I measured my swing, my fib retracement tool from this swing high to this swing low, or from this structure high to this structure low. Now I'll be completely honest with you, and the first to tell you, I don't know. I mean, this is pretty minor resistance level. This is a minor resistance level. There's a very good chance that this could end up rallying, and we could end up seeing something like this. Okay? Or we could end up seeing something kind of like this. Something around these lines. Now, I'm going to go ahead and delete those because it just makes you kind of dizzy. Not really dizzy, but it just messes with your eyes. So either way, I mean, I would say the actual trend started back here because this was the highest point of all of this. So that's what I would say. But in reality, I mean, look at it from this angle. You know, we had our initial high, initial low, a new lower high, and then a new structure low right here. We kind of retraced a little bit back into resistance, and we got rejected right away. Came down here, kind of retraced a little bit back into this resistance level, and then went ahead and got rejected again, and made a new lower close, retrace back into structure, hit resistance, and basically fell off again. So even though this is minor structure, it's not a bad idea to even take this, to look into this. I mean, right now the pound Swiss, if I was to lose this trade, it's like $94 loss. So it is kind of a big loss, but you know, I think there's a decent chance here. I think there's a decent chance. You never know. You absolutely never know. I mean, we came up here, and this big green candlestick is certainly a bearish indicator to me. Granted, we did trend higher, but I don't know. Now, on the relative strength index, the RSI, we were oversold right around here. Right after we had that big green candlestick, we went to 82, which we are oversold on the relative strength index, which is an indication of a reversal. But we also went overbought right around here. Let's see here. What is our 20? Yeah, we went overbought right around here. So, I don't know. I mean, is this going to continue higher? Is it going to continue lower? I don't know. From what I'm understanding, because we went oversold right here, we did continue to go a little higher, and then we started to fall. On the RSI, as you can see here, we do have some bearish divergence. We are certainly have a nice downward slope here, so that is a good indication that this is going to continue lower. But the RSI is not a perfect indicator, okay? All indicators lag. The RSI is really no different, and it's not a perfect indicator. Sometimes we can see things like here. I mean, yes, we were oversold right here, and then we kind of trended down a little bit, and then we had our pop, right? And then we had our bullish divergence here during the time where we had the pop in the market, the retracement. And then, you know, for a long time, we kind of had bearish divergence as we were heading down lower. Look, I know it seems kind of convincing by me pointing out those things because they seem to correlate with the market fairly well. I mean, look, bullish divergence, or we were oversold right here. And then we had bullish divergence after that, and look, we had a bullish trend. Or at least we had another leg to the bullish move, right? We ended up going higher. And then right here, we were overbought. So if you had sold during the overbought condition, we could have made money that way. And then we had bearish divergence again, which we certainly saw on the charts. Now, this may seem very convincing, but there are times when the market gives you an overbought condition, and yet the market continues to rally. Or there are times when the market gives you an oversold condition, and the market continues to fall lower. It doesn't always mean a reversal is coming. But if you combine the relative strength index with technical analysis, it can be a very powerful tool. So that being said, though, I do highly recommend it. The actual settings that I use for the relative strength index is the upper band is 80 and the lower band is 20. I think on average, I think it's actually set to 70-30. So I actually increase the upper band to 80 and I decrease the lower band to 20. You might be able to get more of an accurate indication of where the market's going if you increase the upper band to 90 and the lower band to 10, but I don't really know. I've honestly never done that, and I don't know how that would affect the performance of the relative strength index. But anyway, so that's the pound Swiss. You know, we're taking this trade. Hopefully it'll end up working out for us in our favor. Next strategy is the pound yen. Well, actually, it's the New Zealand yen. New Zealand yen. All right, so we took this trade on the 18th of Monday. I set my entry and my stop loss, and then I kind of just went away, and unfortunately came back to find that we didn't even bother to go down. We just rallied all the way up. It's not even a complex pullback, as you can see. We didn't really have a retracement and an extension. It just extended all the way. And we had a small retracement right here, but it's really more just a blip in the market at this point. So in reality, I mean, I'm going to be completely honest with you guys. This one sucked. I hate it when I take trades and I put my trades on. I'm not really watching and they end up losing me money, right? But because it's not a back-tested strategy, it's kind of to be expected to some extent. So we did break above and we closed above here. So what I'm going to go to remove my drawing tools, take this off. What we could do is, because we broke above structure, we are coming up against some major resistance levels right here, or at least significantly more so of a major resistance level than here. And so far, we closed above here. Let's see. No, we haven't broken above this resistance level. As you can see, we've had the market has responded multiple times with this resistance level. We had first response here, kind of came up, got rejected, came up again, broke a little bit above, but then rejected thereafter, so kind of a false breakout there. Got retested, got rejected again. Tried to come up again. Tried to come up here, got rejected. Actually broke a little above a little bit, as you can see, but then got rejected. And then retested, got rejected again. So are we going to get rejected for, what was this? I'm not really going to count this one, but let's see. 1, 2, 3, 4. Are we going to get rejected for a fifth time or not? So I don't really know. I'm not going to be willing to take any trades until I know whether or not we're going to get rejected for a fifth time. If this does get rejected, then again, you could start looking to take trades to the downside, start looking to short the market here. But as of right now, I'm kind of interested. I'm more of in a wait and see holding pattern. I'm not really interested in doing anything with this at the moment. I don't think, even though we broke above the structure level, again, we're coming up against a pretty big resistance level right here. It is absolutely looking like it's going to rally, break the structure, retrace, and then go from there. So I do think that is likely to happen here, because we're coming up here. We're not really giving a lot of signs that we're going to stop. We were overbought on the RSI right around here at 93. We are at 93.70 on the RSI. When I'm actually hovering over here, look down here to see what's actually happening on the RSI. I'm trying to use the southern pointing part of this cross here to help you guys identify this. So don't look at the center cross. Look down here and look at where the actual bottom part of this cross is actually pointing to, what it's crossing over. So right now we're at the RSI right here, and when I hover over this section, look over here to actually see. Well, don't look at that eye, but look over here at those numbers above above my pointer right there, and you'll see the numbers that are popping up, and that's where I'm getting those numbers. So 93.70 is what we're currently at, and we were at that here. So we were overbought, and yet here's a great example that the market did not come down. Now, this could be an early indication the market will come down, because we're overbought, right? It could be an indication that the market will fall. But look at this. If you had shorted the market right here, right when the RSI said to, that the market was going to fall, you would have lost money because we came all the way up here. And even if I had combined the relative strength index with my technical analysis, which we had broke below, closed below, we made a new structure low right here. I thought 618 retracement, go ahead. I also had RSI confluence, and yet it still stopped me out. So the RSI, while it is a very, very good indicator, I don't use it as if it's perfect, right? I don't actually use it in my trading strategy at all. I like to look at it, which is why I have it up, but it's not something that I need to have. I don't have to have an oversold or an overbought condition in order to take a trade. That's just not something that I need. So that being said, right now we're just kind of waiting to see what's going to happen here. Let's go ahead and close this. Pound yen. This is the last currency pair that I got involved in today. I believe it was today, right? Pound yen. Yeah, it was 40 minutes ago. And let's see. As you can see, it looks like a pretty straight, clear-cut trend continuation pattern. Just like many of the currency pairs that we've been looking at, it is a yen pair. So right off the bat, that makes me a little nervous. We're risking $158 to make $235. So that is the craziness of the yen pairs. Particularly the pound yen has a very high amount of volatility. Not only does it have a very high amount of volatility, the spread is also quite high as well. The spread is between the exchange rates between the yen and the pound, right? And that exchange, it's a lot, okay? But you can make a lot of money off of it, which is why some people love this trading pair. The only problem is that you can also lose a ton of money off this currency pair. So we're risking $158. We stand to make $235. Cross your fingers. So far, it doesn't look bad. We haven't really done anything here with regards to price action, structure analysis. We haven't done anything that indicates that it's going to continue higher. We also haven't done a whole lot to indicate it's going to continue lower. We're just a little bit above the entry point, so we're a little bit above a 618 fib retracement level. We are coming into the resistance level, our structure. We already came into the structure right here. Sorry, let me change this. Yeah, you know what? We'll use this one because I like this. It's a bit of a brighter color. So as you can see here, we are absolutely coming up into this resistance level right here, this resistance structure. This is where the resistance started, and we've kind of been blowing through it. I like to look at the last leg of this. This is the zone, the structure zone that you really want to look at when you're looking at these kinds of trades. So like for up here, for me, it would have been this, right? It would have been this high and this low that would have indicated that I would have looked at for the market to retrace into and for it to get rejected. It could get rejected almost anywhere in that zone. Now, same goes for this area. This is definitely where you want, if there is going to be a rejection of a price level, this is where it's going to happen. It's going to happen somewhere in this area. And it certainly seemed, and we're already in that kill zone, if you will. So I don't know. I mean, I'm not seeing a whole lot of bullish signs here, but I'm seeing oversold. An overbought condition on the RSI right here, 90.37. But again, that was all the way down here. And clearly we rallied. I do see bearish divergence on the relative strength index, so we are getting a little bit of that, but is that going to continue? I don't know. Perhaps it's going to go higher. So we'll just have to see what happens here. But, like right here, look, we didn't really have bearish or bullish divergence. We just had consolidation on the relative strength index, and look what happened. We kind of came up, and we kind of came down. But yet on the relative strength index, it just went sideways. It wasn't up or down. And we did have, I want to say, we had an overbought condition here and here. This one was 82.77. This one was 81.41. So, and eventually we did fall, but these were not very huge overbought conditions like this one. This was 89.44, and it did end up falling. So, but again, look how close together this was. This was like right on top of it. Sometimes the RSI throws up an overbought or oversold condition earlier than before the market actually makes us move. And sometimes it throws up that signal around the time that the market is going to make the move, and they're pretty right on top of each other. Like this one, this is an overbought condition of 81.41, and we were retracing back into previous structure. We're hitting resistance level right here, and we ended up rolling over. So sometimes that stuff happens. It's just, you don't really learn a lot of this stuff until you start. Well, first of all, you need to take a course that teaches you a lot of this stuff and goes in more detail than what I'm going into. But you need to practice each and every day, or at least practice multiple times a week. Try to get some time into the charts. Guys, this is one way to generate a lot of wealth. If you become successful at trading, you can really do wonders. You can make tons of money. All right? You can do really, really well for yourself. You just have to put in the time and the effort. But guys, this is what you need to do if you want to become a consistently profitable trader. If you learn support and resistance, and more importantly, in order to learn support and resistance, you need to learn technical analysis. You need to learn how to read a price chart. If you can do that, freaking A, you can read any price chart, and you can become a consistently profitable trader. It's really that important. But you're never going to get there if you don't take the time and practice and actually look at the charts every single day, or at least as often as you possibly can. I know for those of you guys who have full-time jobs, this is actually a very difficult thing for you. But seriously, hey, if you are at home because of COVID-19, you have a lot more free time on your hands, and heaven forbid you didn't get laid off or furloughed. If you did, my heart really goes out to you. I truly am sorry for you. I know what that's like. But, I've told this story many times. I was living with some friends years and years and years ago when my wife and I first got married. And the husband ended up losing his job. He got his old job back, but he wasn't getting paid enough money. And eventually, after years of really taking out his retirement to try to keep the house afloat and doing everything he possibly could to keep the house, it just wasn't enough. And he ended up getting foreclosed on and evicted. My wife and I were living with them at the exact same time. Look, I know the destructive damage that can happen when you lose income, when you lose that cash flow. And sometimes you can have you can have tons of savings, right? A whole year's worth. It doesn't even matter. When we were living with that family, those friends, those friends were in that position for years. I think a total of 2 years. Things were very tight, and we were kind of, I don't know if I'd say they were poor living in a nice house, but they certainly were living paycheck to paycheck. It was, and actually they were, it was bad. We'll just say that. Things were very, very tight. And eventually it all came to a head, as financial stuff typically does. So trust me, I understand. If you've lost your home, or if you've lost your job and you're afraid of losing your home, whatever, my heart really does go out to you. I understand what that's like. This is why this is so important. If you rely on somebody else to provide you an income, then you are at the mercy of whether they can continue to employ you or not. And you rest assured, they are going to do what is within their own self-interest. They're not concerned about your well-being. They're concerned about their company. And they're not evil or corrupt for doing that. That's not evil and corruption. That's just normal human activity. It's not wrong. Would you rather them keep you on and then have to close the entire business down? Or would you rather furlough you or lay you off, and then so they can continue to keep the business running? Right? Maybe your skills have become obsolete. I don't care what the situation is. It doesn't matter, does it? All that matters is now, what are you going to do? The best thing you can do is invest in yourself. Increase your human capital. Increase your skills. Learning how to trade is one of those reasons. Become financially free by taking control of the source of your income. Trading is one of the best ways to do that. You don't have to sell anything to anybody. You don't have to sell a product to people. All you have to do is learn how to read charts, come up with a trading strategy, and then backtest that trading strategy, and then start trading. I mean, I make it sound really simple. It takes a long time, okay? It's not an easy thing. So get started now. But seriously, you learn to read support and resistance levels. If you learn to read the price chart, you can end up generating for yourself consistent wealth. Trading is, as I have shown countless times, it's not always a consistent thing. But on a properly back-tested trading strategy, it can be. Sure, there are drawdowns and there's times of losses, but in the end, you should be able to make money year after year, or at least that's the idea, right? That's the idea that we're all sold on. That's what I believe. I think that's a possibility. I know that there are people that are doing this. They taught me how to do it, and I believe it. And it's all about that belief. So guys, you need to take control of the source of your income. And the best way to do that is, one of the best ways to do that, and there's a million and one ways to do it, but one of the best ways is trading. So get out there and learn to read those price charts. Learn to read support and resistance levels. Build that new skill so that no matter what happens, you're not going to be reliant on a corporation. You're not going to be reliant on someone to pay you a job. You're not going to be dependent on somebody else. But it all starts with the skill. And you need to learn how to read a price chart. But seriously, if you can learn how to read support and price chart, and you can learn how to read support and resistance levels, you can literally, I said that really weird, you can literally read any chart. You can literally go into any financial market and trade it. Let's say Forex is not to your taste. You could do the futures market, commodities. You can do stocks, bonds, whatever. You can get into options, although options is quite the different animal. But you can get into that. Again, it all is based around understanding how to read a price chart and being able to identify support and resistance levels. That is key to being able to learn how to do this. All right. So guys, hope you enjoyed that video. If you did, make sure to like the video, subscribe to the channel, and don't forget to check out the website at newmillenniumwealth.com. If you'll do all that for me, I'll see you guys in the next video. As always, know the risks, plan accordingly, and have a great day.